A lot of traders spend hours looking for entries, but the entry is actually the last thing I think about. Before I enter any trade, I answer three questions. Where is price actually going? Where do I want price to react? And what confirms my idea? Today, I'll show you exactly how I answer these questions on this GBP USD trade. So before I even open the lower time frame, right, the first thing first, I need what? A directional bias. And how can I know my directional bias? And what is directional bias? Directional bias simply means what? Market structure. The story that price is simply telling me, are we bearish? Are we bullish? Ranging? What is the higher time frame telling me? So I don't rush. On this video, I'm going to go as simple as possible to break these things down for you guys. So my highest time frame here on this my time frame bar is the 3 months, but I won't be using that. So let's say I start with the weekly time frame because we need a bigger picture of what price is saying. Now, what am I looking for on the weekly? Do I need to buy or maybe see one kind magic or holy grail stuff for me to know the direction? No, I simply want to see what a sweep of liquidity, the previous week sweep or the either low or high, right? So at this particular zone, let me highlight it with a red with this eclipse too. You can see, right, price what swept what this previous day low. Though I am not a CRT trader, right, but I've learned the strategy. So some concepts in it, I do add it with other strategies that I've learned, right, to come up with a better decision in trading. So some people do call this what a CRC, which is candle rate theory. This is a reversal model. So on the weekly time frame, I only look for what sweep. So this green line that I just drew now from that particular zone, right? You can see it is what the sweep. Now it swept what this week's candle, this middle week. Some price action trader do call this pattern what morning star, something like, yeah, morning star. Some say head and shoulders on a lower time frame. So we have different strategies and so I'm done, right? I'm done with this weekly. Just what is sweep. Then I'll zoom down to the daily. Now on the daily time frame, clearly you can see what price is saying. The daily is bullish, right? If you notice, initially it was in a bearish phase, which was making low high, low low, right, low high. Now this is where it's reversed now and started what's buying in the opposite direction, right? So we had a change in state of delivery, right? Or what a structure shift at that particular zone. So markets what change direction. So this is a change of direction at that particular zone. So still I'm going to break this 10 down. So don't rush, okay? Calm down and listen to this video. Now, one thing I want you to understand about bias is that a wrong bias usually leads to good entries in the wrong direction. So, if you don't understand this, just know that it will be very hard for you. As I said, good entries in the wrong direction. So, zooming down lower from the daily time frame, what I just wanted to spot on the daily time frame is the same thing, right? If what price sweeps that what's low, you can see we confirmed what the sweep. So it has been confirmed. Now I want to look for entry just below this range. Let me show you just below this range here. That's price sweep. Let me use spread to mark it. See this red zone that I marked on the daily time frame. I want to look for entries just below that range, which is what a buy entry, based on the fact that price has what swept what the sell side, this this sell side liquidity, right? Price has swept it. So I'm looking for what a buy on this particular market. So I went lower, right? I went lower on the 4 hours time. Still, there is not what a clear picture of what price is saying. Most of you will see this and just be like, um, the market is ranging. There's no entry. No, right? No, you are the one that don't understand structure properly. You might see it as ranging, but others with a good feel and you get good TE don't see it that way. So this range, as I was saying, right? Let me remove it and instead just extend this green line. So we'll be looking at it from there. So just below this green line to the low. So So still on the 4 hours time frame, what I couldn't be able to spot anything. So let me zoom lower. The 1 hour kind of correlates with the 4 hours. I don't know, but in a way, yeah, I believe that they correlate. So you guys are seeing my other block now, right? Here's my other block. Then why did I use this? You cannot be able to see it clearly here, right? So every chart has hundred of possible areas, but not every area deserves my attention, right? Not every area what deserves my attention. So this is my what POI, and I'm going to explain for you why I use that one and why I ignore these rest possible ones that you are seeing, right? So let me zoom down lower. Let me just go directly to the 15 minutes time frame. Now on the 15-minute time frame, you'll still be a little confused. You'll be like, but price is ranging, boss. How did you get an entry? How did you do this? How did you do that? And all of that. And you'll be left confused, right? Firstly, after I confirmed a sweep in liquidity, my lowest time frame as a trader is 3 minutes. I don't use 1 minute, so my lowest time frame is 3 minutes. Now on the lower time frame, I could see liquidities. You can see liquidities, but I cannot confirm to the fact that I am going to use this whole candle as an order block, right? This whole candle as an order block. So I need more confirmation if I am to use that, because what we also have what a zone here, right? And this other zone broke structure. And for me as a trader, I don't trade. My lowest risk to reward is 1:5, right? I don't trade below that. So if I have this point of interest, what made me to ignore it and use this one? That you are going to know. So first thing first, we can all see liquidity just below that first interest. This is trying to tell you that okay, it's either you spot the liquidity, as I used to say it in my previous video, or you are the liquidity. Now there are liquidities right just below your point of interest. It is trying to tell you that okay, that is not a valid one. Though it did broke structure. Yeah, you can see it clearly. It did broke structure. What on the 15-minute time frame, but I want more. You get, I want details. If I am going to buy this market, okay, what is going to make me to buy, right? Now the key levels area that I used for that entry, because as I said earlier, this is one of my entry model. I'll just go lower to a lower time frame. Now I'm on the 5 minutes, because if I use this first entry, clearly we all know that my stop loss is going to be below this low, accurately just below this low, you can see. And ah, my lowest stop loss for me that I do use is 10 pips, and if I want to go up um against that my rule, it must be that I have a bigger or maybe better risk to reward ratio that is more than, let's say, 15, that I want to go above that. And this is like 21 pips. We can see it 21 pips at this particular zone, so it's too much. I cannot use that. So when I went lower on the lower time frame, I spotted what the zone clearly, right? This is the zone. This is the zone here. You can see it. This is what the order block, right? What did I use? I used only the body, right? So I can use the complete wick and the body and so on, right? But I just decided to trust my analysis and instinct and used only the body, because it's still valid. You can use the body or everything, right? It depends on you. Then what did I now do? I set my stop loss just below this low, right? So my entry was here, and you can see immediately how price, if you notice something, right, as a trader, right, if you've been trading, right, and you are paying attention to like the details in price, if price mitigates the right maybe demand or maybe supply or the right zone in the market, it's usually reversed with like there's a strong rejection. If you notice that this particular zone there's a strong rejection, immediately price mitigated what's my point of interest, you can see. So this is how I entered this trade, and clearly I knew that okay, for the fact that this is a weekly zone, right, where should be my take profits on still that weekly. How? As I said earlier, this is also part of what the CRT model, right? So I just mixed it with some couple SMC concepts and all of that. So on the weekly time frame, I'm going to go back to the weekly real quick to explain it for you. This is what the sweep, right? Where will be the TP? The TP is still that same candle that you are seeing. This is more like a three candle formation. Let me explain it clearly for you. Let's say now this is a sell candle, a red candle, and if this is being duplicated, let me clone it. And this is the second candle, right? Let's say the second candle might be here. Okay. I wanted to move this a little so they will be closer, but I don't see a reason why the two candles don't want to be closer to each other. Now it might be something like this, right? This is a week. Don't mind my drawings, right? Don't mind the drawings. I'm just trying to pass in an idea to you. That is it. Okay, I have to extend this, I believe. Okay. This is a week. Let me use black for it. And the week is longer to this extent. And this is the second candle. Let's say the second candle is green. I might use green for it and full the opacity. Right, and this first one is what? Red. And let me also increase the opacity. This can be on the daily or maybe weekly time frame or monthly. Right? You can use them. For me, the time frames I do use them, right? It varies, but on the future, I'm going to stick with a video about that. The time frame that I use this, right? So listen attentively and pay attention, guys, because this will be very, very, very helpful. Then this is the third candle. So now clearly you can see that what this is a three candle formation, right? A three candle what formation. Now on the I'm going to set this like this for the fact that okay, some of you might get confused and be like the candles don't have maybe an upper wick, so let me just extend it because I don't want to answer unnecessary questions. So this is a three candle formation, as I said, right? What did you notice? It might be on the daily or weekly. Now this previous week candle, but for me I'm using the weekly. This previous week candle that you see, this red that I used as red, what did it do? It went lower. It is a sell candle, right? Now the next week candle what swept the low, swept this low. This low that you are seeing here now, let me even mark it. You can see this low, this new week candle swept it. Now what am I expecting? Am I expecting just because of this sweep immediately for me to just jump and buy without any like confluence attached to this? No, I cannot just jump and buy. I'm looking for confluence. So around this range, in this particular range, I'm going to look for what? I'm going to look for areas, key levels. It can be supply and demand, right? It can be your fair value gap. But me, the one I mostly use is just order blocks and fair value gap, which is inefficiency or imbalance, anyone you call it, right? Those are the two. Immediately price come back down and mitigate this zone, right? This usually happens all the time. It is going to reject. You are going to see what is strong rejection, right, from that particular zone. You are going to see it. A strong what rejection from that particular zone. This is a three candle formation. This is exactly the concept I am explaining to you. Then where is your take profit? Your take profit is this first candle that formed everything. Right? You can set it just above the wick. Then patiently wait for price to what move higher and take it out. Same goes for sales, right? So this candle, after mitigating your point of interest, it can go up. It is going to take time. It depends on the time frame that you are on. Then take out what liquidity, right? Take out what your liquidity. That is the same thing that just happened here. So I'm trying to break down the concept. This is the take profit. You can see this line here is the take profit. So what did I use as my key levels? Is what my point of interest, right? Is an order block which I spotted on the 5 minute time frame. Yeah. So you can see that. So you can clearly see that, right? How the trade was moving. Then what did I do? Let me go back to the 30 minutes time frame. Then I started spotting what other buys, right? Other what buys. I had a buy here. You can see, but I did not enter it. This other buy that is here, right? I entered. This is the buy. I entered it, but I cannot spot my line because I know that I drew a line there. I cannot spot it, but I entered this buy at this particular zone. It was on the 30 minutes, yeah, that I even used to spot it, right? I believe. So this particular buy, I entered it with what, still the body of the candle, I believe, right? I used the body, stuff like that, to catch this buy. This trade also is still on, right? This trade also is still on. So I'm on two positions at the moment, and my bias for the trade is what, bullish. I'm bullish on this market. I was also hoping that price is going to mitigate this third entry, which I spotted on the 15 minutes. You can see it, right? But price just, you can see this expansion. The market just expanded without pulling back. So what am I simply trying to tell you? I'm simply trying to give you the fact that if you want to spot like a more high probability entry, start with what, a higher time frame that is going to give you, you don't need to be trading every setup that you see. One good setup, professionals do trade like high probability setups. They can have 10 trades low probability and just two high probability, and it is only that two that they are going to take. They are going to filter what, the 10 trades. Now you can see how the trade is moving, though none of them has hit TP. The first TP, which was this one, is the extreme, right? Then this second one is one liquidity zone that is here. I believe it's this zone that I use as the TP. Yeah, for the second one, you can see, right, is that zone. So if I zoom over to maybe the 2 hours time frame, you are going to see the trade clearly. You can see how it's still moving, right? And currently, what, the market is closed. Today is Sunday, being it 5th of July. Also, yeah, you can see how the trade is moving. And one thing, and the last thing that I'm going to say in this video, that if you want to spot your point of interest, make sure that what, you have liquidity attached to it. Is either you spot the liquidity or you yourself is the liquidity. So that is very, very what, important as a trader. So if there is one thing I want you to remember in this video, is this: stop looking for entries first. Build your buyers, find your area of interest, then wait for the market to give you permission, not the other way around. If you're enjoying this breakdown, every Sunday we'll be breaking down rate charts, rate trades, and the thinking process behind them. Because becoming profitable isn't about collecting strategies, it's about making better decisions, which is timing and execution. So I'll see you guys in the next lesson. Subscribe for more.